Hey, it's Brian Ballinger with Remax Advantage Plus in the Ballinger Group. Just want to thank you for being on our channel. Please, again, subscribe, like, and share this link below. Bring this to anybody that you know in your sphere that may be wanting more real estate market information, updates, and really how to. How do we use this real estate market and real estate tools to achieve our goals? That's what this channel is about, bringing information to you. As you know from previous videos, we bring on the best of the best. And today we have Jason Herron from Cardinal Financial. How you doing, Jason?
Hey, good. Thanks for having me, Brian. I really appreciate it.
Yeah, excited to chat with you. Today we're going to chat just a little bit about, really for first-time home buyers. If you're out looking for a home and you've been on the sidelines and where do I start, right? Like, where do I start? How do I get going? What are the things that I'm looking for and the things that, how do I relate to a lender and how that goes? Hopefully this video will answer some of those questions for you. We're going to chat a little bit about the process. We're going to chat a little bit about what we see rates doing. We're going to chat a little bit about some options you may have as a first-time home buyer. So we're going to give you a lot of information. If you want to ask these questions directly to Jason, all of his information is below. Will be in the first comment, so you can certainly reach out to him at the website email provided there. So, all right, let's get started, Jason. Get into the information. Mortgage process. I get first-time home buyers coming to me all the time, and they really just, what's the next step, right? We're going to talk about what their needs are, what's the next step. First thing I always tell them as an agent is let's figure out your budget, right? Let's work backwards from where you want to be at a monthly payment, comfortable, and then let's work backwards from that, right? And kind of see where you're at. So they also know, how do we get started, right? I mean, so I send somebody to you or you get somebody that calls you. What's the mortgage process look like? Just kind of start to kind of getting them pre-approved.
For sure. A great question. The easiest way to get started with me is, there's a few different ways, but the easiest way is probably with starting an online application. Literally takes 5-10 minutes. And really what that does is there are three key aspects of pre-approval. One is credit. Second is income. And third is assets, right? So what we do as a lender is we take all of those three key elements, and those are the three pieces to the puzzle that we really put together to say, okay, what can we be, what's pre-approval look like from here? What does your monthly payment look like? What are you comfortable with? What do you approve for? How much money do I have to put down? Am I available for any first-time home buyer grants, incentives, down payment assistance, right? All of those things, literally all of those questions are answered during that pre-approval process. And like I say, it starts with that initial application, and it takes, like I say, 10 minutes to put together an application. So that's by far the easiest way. Or some folks aren't comfortable with doing that, taking that first step, which is totally fine. I'm always happy to hop on a phone call, answer questions first, and then kind of go into that application process. So it really depends on what the borrower is comfortable with.
Yeah, absolutely. So once they get that application to get a pre-approval, what kind of documents should buyers get prepared as they start their journey? What kind of things should they have in their docket and kind of get ready?
For sure. Now, obviously, every application is different. Every borrower is going to be different.
Absolutely.
So by no way is this an exhaustive list, but kind of general rule of thumb is we'll need 2 most recent pay stubs, your 2 years of W-2s, and then your 2 most recent bank statements. That's really the lion's share of what those documents look like. Now, again, if there's other situations, if there's other things that come up during the application process, there might be additional documents that are needed. But to really get the process started, pay stubs, bank statements, W-2s, that's it.
Yeah. So we get a lot of buyers that come in and a lot of things that happen are I don't know that I have the best credit. I don't know that I'm going to be approved. I'm not sure my income's high enough. These are all questions from what you're saying. You still would encourage somebody to fill out the application, and let's just kind of see where things land. Some people may be surprised for what they may or may not qualify for.
all day long. I tell this to friends and family that it's never too early to start the pre-approval process. And the reason I say that is because, I mean, really all you're doing in pre-approval is gathering information. So I'm not, I tell this to people all the time. I'm not here to sell you anything. I'm not here to push you or pull you in any one direction. I'm here to give you information. What you choose to do with the information that I give you is totally and completely up to you. If we find out, hey, I'm ready now, great. If it's, hey, let's do this, and let's put a plan together to get you where you need to be. We can do that as well. So, like I say, it's all you're doing in pre-approval. I can't emphasize this enough. Is gathering information. So I'm doing my job when I can come back to you and say, okay, here's 5 options. Right? Here's option 1, 2, 3, 4, 5. Here's the pros and cons to those options. I tell those folks all the time, it kind of throws them off a little bit. I say this respectfully. I don't care what option you choose, right? It's not my decision to make, but here are your options. What works best for you, and we can work with them that way.
I love that answer, and I think I totally agree. I think in with working with buyers, and what we want you to know is first time home buyers and somebody looking to purchase a property is we're just here to help you develop a game plan. And it's really hard to make decisions for you and your family without knowing your options, and knowing where you're at. So whether it's, you want to buy tomorrow or you want to buy next December, the more information you can gather and get prepared, the better off you are going to be to succeed whenever that time may come. So I love that
Absolutely.
approach. I love that answer. So, all right. Talking a little about obviously the hot key issue here in real estate is mortgage rates, right? So mortgage rates obviously have seen a little bit of an increase over the last 18 months. In the last couple of weeks, we've started to see those rates improve. But what do you see? You're in the mortgage industry, and we can't predict the future. Nobody can
Sure.
at all. And we like to give people information to purchase now, and they can always make adjustments later. But what do you guys see in your position from kind of where the real estate rates and mortgage rates are going?
Yeah, so I'm going to share my screen here and show you and just share some information with the folks here. So yeah, so what you're looking at here, right? You're seeing on your screen what one with the Fed cut. Yeah. So
Yep.
what this is telling us is this is the right-hand column, right? Fed funds future cut. What are the odds, right? So what this is saying is what are the odds that right now Jay Powell the Fed is going to make the decision to cut the federal funding rate, and what that's showing is a probability. So
Yep.
the way we interpret this is there's roughly a 90% chance that by June of next year, the Fed will cut the federal interest rate, and are probably going to continue to see cuts, in all of those subsequent Fed meetings. Depending, right now, again, there's a chance that we see cuts as early as March, right? The chart speaks for itself as to what
Yeah.
the Fed rate's going to be. So what we can say with, I mean, relative certainty is that rates are going to go down next year. So we know that. What we also know here on this next slide is that home prices are continuing to increase right now. Brian, you see that, right? Just more so even than I, right? You're on the front lines of what we're seeing, that just the overall housing market do, and what we're continuing to see is home values increase. So what we're seeing is home values are going to continue to increase. And then with rates decreasing, what's happening with that is once those rates decrease, so once we see those rates cut in next year, what we're going to see is we're going to see the vast majority of buyers that have been on the sidelines for the last year and a half, right? Everybody's waiting right now, right?
Mm-hmm.
Everybody's waiting for interest rates to drop. Well, when interest rates drop, what's going to happen is all of those people are going to be flooding back into the market, and it's going to create a scenario like we saw, 12 months ago. Now, to that level of intensity, probably not but it's going to heat up. All of that to say is that there is a cost to wait. And I'm going to share this next slide here with you. So what you're looking at here is based off of a $280,000 purchase price, putting 5% down at a home in Washington County. So what a lot of people don't understand is, again, with those home prices going up, when you purchase a home, you're purchasing an appreciable asset, right? The value of what that purchase, the value of that home continues to increase.
Mm-hmm.
While simultaneously, the mortgage that you have on it, right? The mortgage is going down, right? As now, again, not in huge amounts the first few years, but you're paying down that mortgage balance. So you're paying down that mortgage balance, and you're seeing the value of your home increase. When people talk, one of the big buzzwords right now is generational wealth. That's what we're talking about with generational wealth. When you start the home buying process, when you start that process, that's what starts that generational wealth building. So by waiting to purchase until next year, till whenever rates drop, then you're delaying that process, and there is a cost to that. And this is just a rough estimate. So because the same house right now, a year from now, that house is going to be more expensive. So you're going to be missing out on the appreciation of that home. And you're also going to miss out on some of that amortization loss from not paying down the mortgage. Now, all of that is to say, does that mean everybody should go out and purchase a home right now? Absolutely not. If the time isn't right for you, then you shouldn't buy a house, right? Full stop.
Yep.
If you're in the market for a home, anytime, in the next 12 months, I'm telling this to anybody who will listen to me, the best time to buy a house over the next 12 months is going to be between now and February or March. It's going to be in these next 4 months. There's going to be a window that we can really pounce on. And because you're going to get the home at a decreased value comparatively speaking. And then, hey, guess what? This is kind of probably leading into something else that we might talk about is when rates do go down, we can do what's called a no cost refinance for you. So you get the home at a discounted rate. Oh, and you still get to take advantage of those lower rates with a no cost refinance.
Jason, that's great information. I don't think a lot of consumers and buyers are aware of that. I think I always say there's a lot of components and expenses that go into a home purchase, right? Interest rates is one of many, right? Correct. You have gas prices that can fluctuate, energy prices that can fluctuate, taxes can fluctuate, insurance. We know how insurance has been over the last couple of years. That certainly fluctuates. And I think buyers need to keep in mind that interest rate is one of many components that can go up and down that are part of your monthly fixed cost to own a home. So when gas prices are high, that normally doesn't stop people. When interest rates or mortgage rate or insurance rates go high, that normally doesn't stop people as well. So it's one of those things, the interest rates, we've just got to be better at educating the public on what that means and how that component can be variable. So great information. I love the option to have a no cost refi, with the lender. At that point, we've already secured a house. We're not out looking for a house with those other buyers. And I agree with you that we've got a lot of people on the sidelines waiting, and it's a simple competition thing. The less competition, the better you have, or the more options you have as a home buyer, and the ability to secure the home that you actually want to live in for the price that you want to pay for it, to be able to do an inspection and whatnot. So
absolutely. And that's one of the things, if I can just jump in, that's the one thing that this cost of waiting graphic here does not take into account. What it doesn't take into account is what happens when 500,000 buyers in the Twin Cities area, right? When they come back into the market. But not only is that home appreciated over the last 8 months, oh, guess what? there's way more competition. So now that same home is going for, you know, 20, 25, $30,000, you know,
Higher.
over asking price. So, right, that's an additional cost that isn't even being captured by this graphic.
Yeah, no, this is great information. So another question, as interest rates have increased, obviously, you know, as a industry as a whole, we try to pivot and give options to buyers. One of those being rate buy down options. What do you see as far as rate buy down options? What do those look like? And then what other current loan options are you seeing becoming more popular in the marketplace?
Sure, the rate buy downs are a huge topic right now, and you know, it's a complex equation, but I like to hopefully try and simplify it as much as I possibly can. So really, there's a few different types of rate buy downs. There's what's called a 3-2-1 rate buy down, a 2-1 rate buy down, and a one, what we call a 1-0 rate buy down.
Yeah.
All that means is, so let's say, so right now, let's just say rates are at, let's say the rate's at 7.5%, right? So rates at 7.5%. In a 3-2-1 rate buy down, what you're doing is year one of that, your interest rate isn't 7.5%, it would be 4.5%. So you're getting a 3% reduction in rate year one. You're getting a 2% reduction in rate year two. You're getting a 1% rate reduction in year one. That's a 3-2-1. 2-1 buy down. Guess what? Year one, it's a 2% lower rate. Year two, it's a 1% lower rate. And then, right, pretty self-explanatory. So what that does is it helps alleviate some of that payment shock for a borrower. So on a $300,000 purchase price or $300,000 loan amount, if you were to do a 3-2-1 rate buy down, the first year your payment would be $525 lower. Year two, your payment would be $390 lower, and then year three, your payment would be $150 lower. What you're doing with that rate buy down is, you know, you're making a bet, if you will, and you're making a bet that, getting back to that previous screen about when will the Fed cut the rates, you're making a bet that before you see that full, you know, indexed rate of whatever 7.5% in our example, you're going to be doing, again, a no cost refinance with myself or with somebody else. So you're never going to see that 7.5% rate. You're going to be refinancing well, you know, before that. Now, again, can't emphasize this enough. Does that mean you go out and overextend yourself and buy something that you can't afford? Absolutely not, right? We never want to put buyers in a position where, boy, I really can't afford that full payment. But I'm hoping that, you know, rates are going to go down and then I can afford it. That's no, I would never advocate that for a borrower. But what it does do, again, for those folks that are willing to purchase, this is just a way to, this is the classic, this is a teaspoon of sugar to help the medicine go down with where rates are currently at. So that quickly is the rate buy, as the 3-2-1, the 2-1, the 1-0 rate buy down.
Excellent,
you know,
excellent
in
information.
a nutshell. And then to answer your question, what's hot right now? What's kind of trending in the mortgage world? Probably the biggest thing that I see right now is what's called renovation lending. You know, and again, this is a really complex loan product that I'll try and simplify to, you know, to make it, you know, understandable.
Understandable. Yeah.
Essentially, what you can do with renovation lending is you can purchase any home in any condition. And what it allows you to do is you can buy a fixer-upper, right, if you will, because one of the big things that we're seeing right now is a lack of inventory. As an example, I live in Maplewood. I was talking to an agent yesterday, and he said right now in Maplewood, there are 40 homes available in Maplewood.
Yeah. Wow.
40 homes. That's it.
Yep. Yep.
Right.
Yep.
So very limited inventory.
Yes.
Now, what renovation lending does is it allows a buyer to walk into a home and say, well, man, I certainly would like to change this and 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 this. So what it allows them to do is then put those plans together to make those changes and to make the home what they would like it to be. So rather than look at the $300,000 price point, maybe a good option for them is to look into the $200,000 price point and say, okay, what if I purchase a $200,000 home, but then we put in $100,000 of renovations? What does that get us? What does that look like? So what renovation lending allows you to do, again, to grossly oversimplify, is to get those $100,000 worth of renovations done by a licensed contractor, so you can replace right, you can replace a furnace or a roof or the siding or the windows. You can get a new kitchen. You can add a bathroom. You can update the bathroom. You can get all that done, and I'll have that financed through your mortgage and not go out and put that on a credit card at or do some sort of secondary financing with a 18, 19, 20% interest rate. You're able to do that at, whatever, again, my previous example, at a 7.5% interest rate, and make that home what you want it to be. Right. And take it and taking advantage of that renovation. So yeah, again, super complex. Anybody has any questions about renovation lending, happy to answer those. But yeah, the key takeaway is you can purchase any home in any condition with renovation lending. You can make it what you want.
So right now I can see the viewers' heads just spinning, right? Because it opens up a whole new world of what the home buying process can look like. I think we get so pigeonholed into, here's my budget. It's a $50,000 budget. I only can look at houses, because your example, we got 40 homes in Maplewood, right? Well, if your budget's between 300 and 350, that may look like 4 homes or
Absolutely.
5 homes, right? So what we're doing with this product, and I mean, you've taught me something today. I think it's a very, very, very creative way to approach the home buying process in the current market we have. You've maybe just doubled the inventory available to a home buyer, right?
Sure. Now, again, getting back, is this the right is this the right loan product for everybody? Absolutely not. Right? Absolutely not. But
Individual case
it's
by
an
case.
option. Yep, absolutely.
Yep.
It's an option, right?
Yep. Great information today, Jason. I love it. Before we go and wrap up, what other, coming into the market, what are the top questions you get asked by more, people looking to apply?
Sure.
Let's say they're not ready to take that next step. What are the common questions that you get if they just want to start with a phone call?
Yeah, it's a great question. And a lot of what I try to do when I talk to borrowers is I always try to find out kind of what's the question behind the question,
Yeah.
right? So what that really leads me to is I see, and what's communicated to me are a lot of misconceptions about the home buying process and lending process. And you touched on it a little bit, when we first hopped on this call here, Brian. Is I hear there's a lot of misconceptions. I got poor. My credit score is not over a 700. Don't care. Well, I don't have, I don't have anything saved up for a down payment. Don't care. Or I don't have 20% saved up for a down payment. Don't care. Right? Not that doesn't take you out of the running to be pre-approved. Well, I recently changed jobs. Don't care. I haven't been at my current job for 2 years. Don't care. Right? So there's a lot of misconceptions out there that people think they have to have perfect credit, they have to have 20% down, they have to be at the same job for the last 2 years. There's a lot of barriers that people have created that have prevented them from even taking that next step forward. I'll tell you, nothing nothing gives me more joy and more satisfaction when I talk to buyers that are like, man, I didn't think I could get, I didn't think I was ready to go out and start looking. I didn't think there was any way I could get pre-approved. And in my mind, I'm like, well, yeah, you're not even a difficult file.
Yeah.
Right. So, but a lot of people have these preconceived notions that, I'm not ready. And again, it gets back to what I was saying before. It's
Yeah.
never too early to start the pre-approval process. All you're doing is gathering information. All we're doing is answering questions and putting together a game plan. So,
Wow. Jason, you're a wealth of knowledge. I appreciate you. I thank you for taking time out of your busy Friday to come on and chat a little bit about, share your expertise with our viewers, and also, give us a little forecast on kind of what you're seeing. So hopefully we gave you a lot of information today. That is the goal, is to empower you as a home buyer, to give you information, to go out and make good decisions for you and your family, to start your journey of home ownership. That's the goal. To show you that there are options, and that you can be a homeowner. So again, Jason's information is below. My contact information is below as well. We'd love to help you answer any questions and bring clarity to this whole process for you. Thanks for tuning in. Remember to share this, like it, and subscribe. That's how we get more viewers and we help more people.